Good morning. I'm here with Chris Mulder of Tridac Mortgage. How you doing, Chris?
I'm doing well, Lena. How are you doing?
I'm doing well. I'm hanging in there in this very unique and interesting time. How about yourself?
Oh my gosh, hour by hour at the moment, keeping sanity. You know what? Even though we're all self-isolating, I'm very much looking forward to an extended long weekend somehow.
Oh, I know. Me too. The problem is, of course, as is the norm, it's Easter weekend and the weather is terrible. So even if you have a backyard, what are you going to do? Have a barbecue in the rain?
Not likely, not likely.
So how are things looking in the mortgage world?
Well, in many ways, everything's different and yet the same. Lenders are still doing their best to make sure that capital keeps on flowing. They're still funding mortgages. They're working with borrowers that have been affected by the COVID outbreak, whether it's through the deferral program or more immediate borrowers who have purchased or were qualified for a mortgage and then have lost their job. So we're working through these problems. Money is still flowing. And you may have heard over the last week or so, the government, CMHC, has stepped in to back mortgage lenders to ensure that money keeps on flowing. But the interesting story really is regarding interest rates, because the fundamentals of rates, whether it's the prime rate or the Government of Canada bond yield that affects fixed rate mortgages, is low. So we would expect interest rates to be low right now, but mortgage lenders and capital markets are very confused. They're very concerned, and there's a heck of a lot of uncertainty. We don't know when this is going to end, how long it's going to go for, how bad it's going to be. And due to that uncertainty, mortgage interest rates are surprisingly quite high relative to where we expect them to be. So overall, rates are high. It's not a great time to refinance right now. So if you can wait, I think just be a little bit patient. Maybe May, by the time May rolls around, we'll start to see things go back to normal, hopefully. But who knows at this point? You know, it's really anyone's guess. But that's kind of the Cole's notes on what's happening day by day in my business on the mortgage side. But I'm curious how you guys are faring in the legal profession.
You know, we're still very busy. And again, we're busy with a lot of refinances, a lot of placing new mortgages. What we're not busy with is new purchases, new sales, because, as you know, people aren't necessarily lining up to sell their homes right now. There's a full-on prohibition on having open houses for the Toronto Real Estate Board and probably other real estate boards as well, which is, it's necessary right now. So I think we've got a lot of people who are waiting on the sidelines saying, let's see how this shakes out over the next few months, and maybe we can put our house on the market, in June and in May. I think May may be a little bit ambitious, so I think a lot of people are hoping for June, but we'll see. This is it's an unprecedented year. We don't know what's going to happen, but we are certainly not seeing a lot of purchases and sales. Tons of mortgages though, which is, I guess, good for your business and ours and the general public as well, because they have access to money.
Yeah, definitely critical right now. And how are you faring with the digital and virtual meetings?
It's going great. We're finding people are really receptive to it. They love it. We don't have a lot of people who are, wanting to come into our office. We do still make that accommodation when someone, when they'd really like to do it. If they are just not comfortable with technology, we'll find a way to do it safely. We have, plexiglass screens up in our offices, masks, gloves, everything. It's a pretty impressive setup. But again, that's not happening. So we're doing, 98% of all of our meetings virtually right now.
Right. Amazing. So business as usual, it is continuing. You are open for business.
We're open for business. As long as you guys are working, we're working.
Right. Very good, Lena. Cool.
Yeah, we've had a lot of people actually reach out and sort of ask us questions about, is the land registry still open, which I've answered yes. And also we've had a lot of inquiries from our clients about mortgage rates and about what lenders are doing in terms of how much they're lending. What if the loan to value is slid because of this recent pandemic? Maybe you could speak to that a little bit, because we get this question every day and we're not mortgage brokers. So usually what I do is I pick up the phone and I say, talk to Chris or one of our other partners.
Right. Yeah, so there have been some changes to policies, especially around rental properties. So the appetite for financing rental properties has been scaled back by many banks and mortgage lenders. On the private side of the business, this has been particularly difficult because when we're talking about private money, this is private individual investors, and they're feeling the pinch of the uncertainty much more aggressively. So we actually had commitments that were already issued by private lenders be changed, basically after signature, which is really not good for business. It's not a way we want to be doing business. But the lenders have deemed it necessary as an order of survival. So we're getting extremes because if you're a AAA lender bank, it's kind of business as usual because you have the backing of the government. But as you move down the scale to Alt A lenders, B lenders, and C lenders, which are fully private, they're having to pull in and rein in what they would normally do. So we're seeing that, especially with private second mortgages, for example, big cutbacks on total loan to value. So yes, the market is being affected, definitely.
Yeah, I think it's a case of a lot of jitters, and I mean, I think if you get a really strong application coming through and you're an investor, I'm putting myself in those shoes because I've been in those shoes before. You look at the application, I know what a decent loan to value. I'm still going to be happy to participate in something like that. But I mean, you get news that came out this morning, which I don't think is a surprise to anyone, where 1 million jobs have been lost in Canada in the last month. That's something we knew we were coming, but now there's a number to it. So do you think that that type of news is going to further impact the availability of money?
Yeah, 100% it will. And I think there's just, I kind of perceive this as an ice age. It's just everything is completely frozen and locked up because there's uncertainty. In business, we make decisions based on evaluating future likelihood of an outcome. That's just what business is. And at the moment, we're completely blind. Blinders are on. We have no idea when this is going to end. If it's May, if it's June, and of course, the longer this goes on, the more business is going to be impacted. The more housing prices are going to be affected. The more equity positions get eroded. So there's a lot of uncertainty in the market, and that's causing everything to freeze.
Mm-hmm. So I guess bottom line is you're still moving forward. It's just terrain that we haven't been on before, and we're going to take it day by day, right? Keep your clients safe, and we'll walk the road together.
That's right. Yeah, and I think, as you said, keep the clients safe because there's an overarching kind of language being used in mortgage origination circles from lenders and brokers and partners, and that is, look, take a really common sense approach when you're advising a client. If they've both lost a job and they're looking to buy a house or are in the process of buying or refinancing, maybe we should be just pausing and double thinking that, or checking in on that again, because it's not serving anybody if they're getting money that they can't repay in the future with so much uncertainty. So we got to look out for each other, look out for our clients.
Mm-hmm. No, I couldn't agree with you more. Last question I have, this is one that I was asked yesterday, and I'm curious to hear what you have to say about it. Do you see things like the federal government's the emergency wage subsidy? I think it's the $2,000 a month or whatever that a lot of Canadians are now eligible for. Do you see incentives like that delaying clients from doing what they might otherwise do to get money in times like this when they may not be working as much as usual, like placing a new line of credit against their property or taking equity out of their home? Do you see that actually impacting the amount of people wanting to refinance or place a new mortgage?
Short answer to that is no. I think the help that's being provided by the government is exemplary, and it's in many regards political to show that something is being done. But it isn't really enough to stem the flow, especially in a city like Toronto that's so expensive to live. I don't see it as going very far. So sure, it may delay for a month or two, but this is a macro, big picture issue, and we're all worried about the short term right now. But this is going to go on for months, until we recover. Your guess is as good as mine at this point, but it certainly is going to be a long, drawn out affair. And so I think as we start to get back onto stable ground and we start to understand how bad things were and we start to rebuild, there's going to be a tremendous need to support homeowners who have equity in their properties, to access that equity, to consolidate debt and improve their overall financial picture, really, to the cash flow at home. So I think in the future we'll see a lot of refinances.
Yeah. Okay. Well, I agree with you, and I think that's probably good that people have access to people like you. We're here to support everyone as well, and yeah, business as usual, but we're all just kind of taking it day by day. Chris,
Exactly. I think that's
anything else going on this week that you wanted to bring up that you think people might be interested in? Anything more new than anything else?
No, I think it's kind of wait and see. The market is very reactive to any type of news, and so we'll see what happens. In I think Easter, everybody's going to cool it. Next week will be very interesting to see what the numbers look like, and maybe we'll get a better picture if we are in fact flattening the curve, because the numbers have been kind of steady at the highs. They haven't really started to decrease yet here in Canada.
Exactly. And I think that's what everyone's saying. Let's start to look 2-3 weeks out and see what the numbers are saying, and we'll take it from there.
Yeah.
So, okay, Chris, thank you so much.
Very good, Lena.
It's a nice way to end off a week before a long weekend. I appreciate it. So
no problem. It's my pleasure.
Absolutely. And we will talk to you hopefully next week.
Sounds good, Lena. Happy Easter. Be safe. Cough in the sleeve.
Take care.